Hello, everyone. This is Debra Richardson, and today I am putting the AP in Happy, where accounts payable teams are empowered to protect the vendor master file from fraud. This podcast will give a voice to accounts payable team members by talking about the growing reality of cyber attacks in their world and which vendor setup and vendor management techniques they can apply to protect the vendor master file from fraud. Need training? Visit the Vendor Process Training Center to enroll in your choice of weekly live and on demand training sessions. Plus, get access to vendor setup form templates and reference tools that will help you and your team to reduce the potential for fraud, compliance fines, and just overall bad vendor data. So, sign up for a free account to get access to free training sessions, vendor process FAQs, and a resource library with information you need to manage your vendor master file. Visit training.debrarrichardson.com today. The link will be in the show notes. Don't forget to still do your tax reporting research at the state level, even if that state participates in the combined federal state filing program. For two reasons, you still need to check and a process to do it. Keep listening. Welcome to episode 371, Tax Year 2025, Combined State-Federal Participation. Two reasons you still need to check state requirements and a process to perform. All right, so first I'm going to talk about what is the Combined Federal State Filing Program from the IRS. And then I'm going to talk about the two reasons that I think you need to do state research, and it could be more, but I have two. And then finally, I'll give you a process that I used or I had my team use when I was a practitioner. And by the way, for those of you that have listened to my podcast for any amount of time through a tax reporting season, you already know that I used to be a practitioner. I was an AP senior manager over global vendor setup and maintenance. We had 140,000 active vendors across 7 different ERPs. We processed 2,000 vendor requests per month, and that number or volume of vendors translated to anywhere between 24,000 and 30,000 1099s and 1042s. And so what I'm talking about today does include that process I'm talking about does include what I had my team do. And so hopefully it can help add to your process or give you an idea of what you may need to create. And feel free to customize it as you see fit. All right, so with that, let's get started with what is the Combined Federal State Filing Program. Well, when you file electronically your 1099, miscellaneous 1099 NEC, I'm going to focus on those two, but when you file electronically your information returns with the IRS, they will send the information returns to the applicable states, and it does list, or they do list, which returns are included in there, and 1099 MISC and 1099 NEC is one of them. Now, every year the IRS publishes the participating states, and by the way, when I say file electronically, as you all know, there is a new way to file electronically with the IRS. Historically, it was the FIRE system, and that is still around. It is still available through tax year 2025. For tax year 2026, next year, it is supposed to be retired. but it's still here for tax year 2025. But also, what is here for electronic reporting is IRIS. And so IRIS has been around since tax year for reporting tax year 2022 and 2023. And the combined federal state program is now within IRIS as well. And so when you look at the combined federal state program, that participation, you have, or you can look for fire, you can look for that information for fire in publication 1220. And that is where it gives all of the requirements and criteria for filing in fire, and that does include a list of the participating states in this combined federal state program. Now, IRIS has its own publication. It's publication 5717, and it also has a section where it talks about the combined federal state filing program. So it's the same thing that I read before when I was reading out of publication 1220, saying that you may report withholdings and payments within IRIS for up to 2 states, right? And so it lists the uh, information returns that are included in this program, including the 1099 MISC and 1099 NEC. And it also lists the states that are participating. Now, I did do a double check of the states from IRIS, or that are participating within IRIS, with the states that are participating within FIRE, and they are the same. You might want to double check it, in case my eyes are fooling me, but there are 33 states that participate in the combined federal state filing program for forms that are filed in FIRE and IRIS. And I'm referring to 1099 NEC, 1099 MISC, but there are other forms as well. And so accounts payable teams, vendor teams, whoever has the responsibility for the, 1099 MISC, 1099 NEC, tax reporting, those folks, right, every year will wait for publication 1220 for fire. And now I guess publication 5717 for iris to look at the combined federal state filing participation to see if any states were added, if any states were removed. Now, I will say for tax year 2025, there were 2 changes. Missouri was removed and Oregon was added. So you do need to know that. You do need to make sure that you're checking each year to see what changes were made. And why does which states participate in this program matter? Well, it matters because if the state participates in this program, then that means that when you file your information returns, 1099 MIS, 1099 NEC electronically with the IRS, they will then, again, as I said before, forward that information to the states that participate, so that you don't have to separately file those returns with those individual states. So the more states that participate, the less states that you have to individually file those returns. Or that's the ideal. That's the ideal plan. But in reality, there are 2 reasons, at least 2 reasons, why you still need to do state research. Now, the first reason is, you know what? IRS may have gotten the participating states wrong, that list wrong. And I don't remember how far back it was, but a couple of years back, may have been 3 years back, the IRS publication, or publication 1220, came out, and it listed states that were participating, right, for that tax year. Uh, And two of the states were wrong. They were not supposed to participate, or they had not agreed to participate until the following tax year. And so the IRS had to issue a revision of Publication 1220 so that they could correct the states that were participating in the combined federal state program. So you do need to make sure that you're doing your research because, right, the IRS could get it wrong. And as a matter of fact, for that same year where they revised it, correcting the combined federal state program, to revise Publication 1220 twice. And I don't remember if it was because they had to correct yet another state or if it was for another reason. So the first reason why you still need to do state research is because the IRS can get it wrong. Now, I will also say, the states may get it wrong too, or they may just not update. I am in Michigan, and so I just went on the Michigan State site for the, equivalent of the Department of Revenue. They're all called, certain things. They can be called certain things or different things in different states. But when I looked up Michigan, or when I looked on the Michigan page for state reporting, Michigan did say that they participate in the IRS's program, but let me get back to it because they said something else too that I think is wrong, but I didn't look at it in time to call them before I did this podcast. I'm recording it after 5, but I do think it was wrong. But the state of Michigan, under their income record form remittance guide, they do acknowledge that W-2s and 1099s are Internal Revenue Service or IRS forms required to be filed by persons or businesses who pay compensation to persons or businesses. And the IRS determines the type of form and the required, and the state of Michigan follows these guidelines. And then they say, for purposes of this guide, income record forms, they list out all the forms of which 1099 MISC and 1099 NEC are included. And then further down, they talk about the income record form filing options in Michigan. And so they list the FIRE slash CFSF, which is the combined federal state filing program we're talking about. They do acknowledge that they participate in the program, and they also acknowledges that it means the IRS shares certain income record form information with Michigan, automatically satisfying a taxpayer filing requirement with Treasury. And so that's great. But note that they specifically called out fire. And when it comes to Iris, they have a note. The note says that Michigan is not currently receiving copies of 1099 forms filed through the Federal Information Returns Intake System, or IRIS. Now, if you look on the publication for IRIS, again, publication 5717, it says that Michigan is included. Now, which one is wrong? It could be that Michigan is wrong. It could be that IRIS, right, may be wrong. The combined federal state filing program within IRIS is incorrect. But I will tell you this, I think that Michigan is incorrect because I had an IRIS training, and so I did do a test form, or 3 test forms: 1099 MIS, 1099 NEC, and then also you can now file 1042S in IRS. And so I did a test of that as well. But when you do that, you get to pick which states, right, that you want to include for the combined federal state filing program. And Michigan was on there. And so I think the state of Michigan just has not updated their record or this page with that information. Maybe last year, I don't don't know. I don't know if I checked last year. And so maybe it was, and they haven't updated it since the year before that, meaning the Michigan's page here. And so if I were doing the due diligence on this, right, I would uh, double check that with the state of Michigan. Again, I am recording this later in the evening, and so I missed the window for contacting them before they closed. But if I was doing due diligence on this one, I would definitely call, because who's right and who's wrong? You need to make sure that you know exactly whether or not these states participate in the program, regardless as to whatever the IRS says. But again, I think Michigan just didn't update it. But if you have vendors in Michigan and you need to do some due diligence, I definitely recommend that you call them, because you'll see the same thing I did. All right, so that was an example of, how the IRS could have it wrong. Maybe Michigan is wrong in this case, but yes, the IRS can get it wrong, and you need to verify who's right, the state or the IRS. Now, the second reason you may need to do state research is because some states, even though they do participate in the combined federal state program, if you had withholding, or if you withheld state withholding from your vendors, then you still have to file with the state. In addition, right, to filing with the IRS, they're still going to send that information to that participating state, but you still have to file if you withheld any state tax from that vendor. Now, if most of you guys already know, on both the 1099 NEC and also the 1099 MISC, there are fields, or there are fields where you can report state income and income tax withheld for up to 2 states. Now, a lot of you may not use it because you may not withhold from any of your states. Probably may not even withhold for federal tax either. But if you do, you can report it on the 1099 MIS, 1099 NEC. And some states, when you have a state level tax withholding, um, then you also have to file separately with the state, even if that state participates in the combined federal state filing program. And how would you know that unless you did the research? And by the way, this research needs to be done every year, because these states, it really started, in my experience, when the IRS brought back not brought back the 1099 NEC. It really started when the IRS, before they brought back the 1099 NEC, because it used to be a form before the 1099 MISC. But when they required Box 7 for non employee compensation, when they required that from the 1099 MISC to be filed January 31st. Versus the rest of the boxes, which were filed later. And so a lot of the states started changing their requirements to adapt to that. And it seems like every year now, states are changing their requirements for tax reporting. And so you need to stay up to date on that. Now, of all the states that we have, do you really need to do due diligence, tax research for their reporting requirements for every state? Well, I say no. And so let's talk about why. And this brings us to the last part of this, where I'm going to give you a process of how to do your state tax research, or state research for tax reporting. And this is something that I used to do, or have my team members do. And I actually used to assign it to a separate employee to do the research every year. But I wouldn't have them do every state. So let's go through this process so you can see how I did it, and maybe you can use the same or tweak it a bit for your process. And when this is podcast is being published January 23rd, 2026. Yes, I know it's like a week before you have to um, report, at least for most states and the IRS. But you know what? It doesn't take that much time because you probably will not have to do state tax research on every state. So let's go through the process. So the first step I always have them do is pull all the reportable vendors. Now, you might want to pull all your vendors and see what states they're in, but if they're not reportable vendors, then, or if you're not producing a or generating a 1099 MISC or 1099 NEC, I wouldn't think that they would count. So I did not have them pull it. If you see a reason for that, maybe you do want to have them pull all the states that your vendors are in, and this could be if there maybe is a mistake for the vendor, right? You find out later that they are reportable and you want to be covered just in case. But I didn't have them do that. I had that employee just pull a report of all of the reportable vendors out of the accounting system or ERP. Now, if you have pulled them all into like a separate uh, tax reporting software or site for that you're going to use to generate your 1099 MISC and 1099 NEC, that's great too. And for that, you still have their state, which is the next thing that you need to make sure that you have in that report you pulled or that file you pulled. Um, you need to make sure that you have the state that your vendor is located in. And so when I had my employee pull the reportable vendors, right, it was a subset of the 140,000 vendors that were included, that were active in our accounting system or ERP. So thank God for that. And so again, we had maybe around anywhere from 24,000 to 30,000 vendors that were reportable. So I had to start there. Pull the reportable vendors and then identify the states that the vendors are in. And so for all of the states where we had reportable vendors, those are the states that we did or that employee did the research in. And so it turns out for that level or even for that volume of vendors, we did not have that many states that those vendors um, uh, were in. And so, of course, we had a lot of vendors in the state that the company was in, or that the company operated in or had branches in. But, it wasn't as many states as you would think. And so it wasn't a lot of states, but those are the states that I had her do the research. And so, what I did is have her do the research and in a file, it was an Excel file, but you can put it in anything, right? But document the requirements for tax reporting for those states and then identify the due dates for the tax reporting. Because not only are you going to need it for the states that do not participate in the IRS's combined federal state program, but you may also need to identify what is required for the states that do participate but they require you to file anyway under certain circumstances, such as if you withheld taxes at the state level. And so document the requirements and the due dates. And then what I would have them do is make sure that they name that file for 20 tax year. If it was for tax year 2025, name it for tax year 2025, but name it for the applicable tax year and definitely save it. And then you can either have that employee or another employee do the applicable filing based on those requirements and document in that same file the completion dates, what forms were filed, how many forms were filed, or how many information returns were reported. Maybe you had 50 vendors, maybe you had, I don't know, 10 vendors. And so this file can serve as a record of what was done and the requirements at the state level for that tax year. And then next year, start all over again. Now, I know some of you are thinking, and maybe you do have this, right? You have, or you're using a provider for your 1099s, 1042s that has the state requirements within their platform. You just need to make sure that their information is updated because a lot of times, right, humans are updating those pages. And if for some reason they haven't updated it and you're using that to go by, that can cost your company, penalties and then interest on that penalties because you may not do something that you needed to do. And so if you have, a large set of vendors in a particular state, I would actually go right to those states where you could have potentially a large number of penalties if you don't do something because you haven't. You were relying on a page on a third party provider site that wasn't updated. Not to say that it's not, I'm just saying you need to make sure that it is updated. And if there's any suspicion, just do your due diligence yourself just to verify. All right. So, with that, I think that is it for today. I do want to say that if you are a user on the Vendor Process Training Center, you have access to a resource library that has links to all of the states so that you can do your actually three different links. I have links for their each state's Secretary of State, each state's page where you can do like a business entity search for validation, and then I also have a link to their tax research page. So if you are already a user, maybe you are a Vendor Process Training Pass member or you're a free user sign up, you can go to the resource library and then go all the way down and you'll see under the tax reporting section, the state sites or sites for state business tax research or state sites for business tax research. Anyway, if you click on that, you'll see all the links. And again, you can sign up for free as a user and get access to not only that information, but some other resources as well that might help you in your vendor setup and maintenance and tax reporting process. All right, so that is it for today. Thanks, everyone. I hope you enjoyed the 371st episode of the Putting the AP in Happy podcast, where accounts payable teams are empowered to protect the vendor master file from fraud. Don't forget to check the show notes for the links mentioned in the podcast. And if you enjoyed this episode, consider subscribing and writing a review of my podcast on the platform that you use to listen. Stay happy.